Hi folks, welcome back to the channel. In this video I want to give you a hack and I want to show you a simplified way of doing ICT top-down analysis. This is very important. In case you're watching this video now, you need to really watch this so you can get every detail. If you are still struggling with understanding market direction and how to bring in different time frames into confluence with each other to be able to get the exact market condition, I'm going to give you a hack in this video on how to basically do it like the ICT is doing. So let's get into this video. Now there are some very important aspect of ICT that you need to know if you want to get it correctly. The first thing is to have a basic understanding of time and price, because the entire market is a function of time and price. And then you have to have a basic understanding of what exactly is higher time frame order flow, as you can see right here. Now when I say higher time frame, it is actually a relative term, because if 4 hour is my higher time frame, to some people it is the daily time frame. If you come over here to where you see time frame, click on it, you're going to see that this time frame extends to almost 12 months, 1 month, 1 week. There are people that look into this, so you have to have your own each, get the best time frame that works for you. Now as an intraday trader, somebody like me, I use the daily time frame as my maximum higher time frame whenever I'm trading. I don't care what is happening in the weeklies, in the monthlies. I just want to see the rhythm of the market within the daily, the 4 hour, 1 hour, and then the lower time frames. I'm going to show you how to basically do that right here. So if you're trading intraday, this is exactly what you should be doing whenever you're coming across your chart. And what I'm going to do right here is to give you the hack I use every time I'm coming to look at my chart and do top-down analysis. This is GBP USD. You can do this on any asset class that you have access to. So I'm going to go to the most recent data right here. I'm not going to look for one right place or the best place and show you how to do it. I'm going to show you what is happening right here from my own perspective. So looking at this, the first thing you need to know is that it's not every data here that you want to pay attention to as an intraday trader. You want to pay attention to the most recent data. Let's say this area. What is happening here is what you should pay attention to. Now, after looking at this, you want to look at what exactly is happening to this entire order flow. That's what we mean by higher time frame order flow. Now, from the look, you know that this is a clear uptrend. That means the market has been bullish over the few days that has been printing these candles. So you know the market is bullish. After understanding the market higher time frame order flow, the next thing to do is to reduce the data. Now look at this. Price has actually moved from here to here. Looking at this, this is almost a month movement, or maybe half a month movement. You want to trade today and you want to trade tomorrow. What you do is that you drop to the lower time frame and get the most recent data that is printing right there. So we go to the 4 hour time frame and look at what is happening. So from the 4 hour time frame, let's assume this is what we are watching right here. Let's say this is the data we are watching right here at this point. So price came, this is a clear downtrend. From here we can see that there is a market structure shift at this exact point. Market structure shift happened here. So after this market structure shift, we had a downtrend up to this level. Then right here we have another shift in market structure right here. Okay, shift in market structure that has happened at this exact point. So let me take out the rest of the data so you can see what exactly I'm saying. Okay, so assuming this is you, from the higher time frame, you just drop down to the 4 hour time frame, and this is exactly what you're watching, and you want to trade today. The first thing to do is to look out for what we call liquidity and institutional reference point. Liquidity are in two forms. We have external range liquidity and internal range liquidity. External range liquidity are in form of buy stops, sell stops, and different order, stop orders. So look at this. Above here we have liquidity residing, okay, and price took it out. So this is an external range liquidity that has been grabbed. Price pushed above. What price will seek to do next is to look for an internal range liquidity, and this liquidity are mostly within a fair value gap, an order block, a liquidity void. these three things. I wish I can write that to you, but you can write it: a fair value gap, an order block, or a liquidity void. Let's assume nothing happened here. You want to trade, and this is 4-hour time frame. So you have to wait for 4-hour time frame to come back into an internal range liquidity, and this is an order block. Let me show you. Okay, let me show you what an order block looks like. This is an order block. This guy is called a bullish order block, basically where the institutions have placed their order, and you will know by the kind of movement that happened immediately. A valid order block must lead to a break of structure or market structure shift, and then it must have an imbalance, something like this. This is an imbalance. We call it fair value gap. This gap right here, close to it. And then the next thing is that a valid order block must be engulfed by the next candles. Now, it is not only one candle that must engulf this order block. It can be more than one. It can be 3 candles, and you can actually see right here. Immediately after this red candle printed, price reversed. This is just like saying the institutions were just here. Order block is a concept that has to do with institutions. They were here and they were looking for people to sell for them, and right here the last candle was where people massively sold for them, and then they bought it, and then price moved up from there. So it created this break of structure or shift in market structure. Now what market will seek to do is to come back to an internal range liquidity. Okay, to come back to an internal range liquidity right here, assuming they have $1 billion, $1 billion, okay, $1 billion, and they were able to only fill in $500 million from this first movement. Okay, $5 million from this first movement. As price comes back, it is going to come back and get the rest of the money that was left. Okay, out of $1 billion, only $500 billion was filled in. So if price is coming back, it's coming back to get opportunity to get the rest and then take it up. So this is why you see price comes back. Liquidity is money in the first place, and then price come back to get it and then move outside there. So what you look out for in such kind of scenario is to basically patiently wait for price to come back. Now this is where time and price comes into this our analysis. Okay, change of market structure, and our order block right here, we're watching it, and then we have a fair value gap attached to it, very close to it. So this makes this order block a valid order block that price may eventually seek to come back to. So as price comes down in 4 hours, if you are patient, you can wait for price to come back to this place, and you can say I want to enter trade. This is how some people trade, and your stop loss is right below here. You can be patient to wait, but if you are not patient enough to wait, you can drop to a lower time frame, that is the 1 hour time frame. Okay, the 1 hour time frame now will give you an idea of what is happening. In the 1 hour time frame, you're going to have a complete downtrend for that retracement coming back to that 4 hour order block and fair value gap. So this entire movement, if you zoom it down, you're going to see that it's an entire downtrend that is happening. Okay, so people are trading this already as a downtrend movement. People in the 15-minute, if you go to the 15-minute, you're actually going to see that these guys are trading this as a complete downtrend. Okay, can you see? Looking at this is a complete downtrend, break of structure right here, or market structure shift right here, and you're going to wait for price to come back and take it again. Price retraces back, you're watching it happening. Okay, so as price is printing, people are taking trades from here, from this time frame. Okay, but you that you're looking at this from the 4 hour time frame, you know that this is your point of interest. This is your point of interest. While these guys are busy selling, we call it counter trading, because the trend is already bullish and then they are selling. They will make money, of course, until when price reaches this point of interest where the institutions have the leftover money that they can take. And this is also an order block, this one. Okay, this is also an order block. Now, how do we know which of these order block price is going to use? price is going to use either of these order blocks. So for us to get the basic understanding of which of these one price will use, let's use this thing called premium and discount level. It was something taught in ICT. Pick your Fibonacci tool, place it where the swing low was, and take it to the swing high. Anything above here is called premium. Above this middle line is called premium level, and if you are selling, you're going to sell at premium. If you're buying, you're going to buy at discount. So if price comes back to discount, it is possible that we're going to get an entry from discount. But the only way we can know that is for us to drop down to the lower time frame and wait for an alignment between these two. Let me show you. This is a top-down analysis. I'm showing you everything that happens from higher time frame to a lower time frame. This is bullish, our 4 hour, but our 1 hour is bearish for the meantime. Okay, can you see our 1 hour is bearish since from here after this market structure shift is bearish? So people are selling already from here and price is coming. Look at this order block we marked out from the higher time frame. It is possible that price will react from there, and it is possible that price will go lower to the extreme order block right here. The only way we can know that is to wait for an alignment between this higher time frame, higher time frame bias, that is the order flow, and then this one. As price is coming down, I want to align my entry, go down to the 15-minute and see what is happening. So from here to here is a downtrend. Let me show you. This entire movement is a downtrend. I did not see a sign for an uptrend. So this is in 15-minute. I'm watching everything in 15-minute patiently. You're waiting for price to do this thing called market structure shift, so it can go back to a bullish market. You're waiting. Can you see? So look at this that happened here. This one that happened as price came to this area, the 4 hour time frame. Now let me adjust it for you to see. As price came back to the 4 hour time frame, look at it, the order block in the 4 hour time frame. What price did was to reverse in the lower time frame, give you a sign that there is a market structure shift here. A market structure shift here happened. So this is now a bullish market for us in the 15-minute. You can even go down to as little as 1 minute time frame just to get an entry. It's called top-down analysis. So if we drop down to the 15-minute, that's where we're going to see the market structure shift. Okay, so in this kind of regard is a good time for us to align the 4 hour time frame, which is a bullish market. This is the bullish market from 4 hour. And then this guy, the 15-minute, is also bullish. So if we are taking our trade from there, we are confident that this trade is going to go. We can take from 4 hour, we can take from 15-minute. Okay, so your trade is going to be less. If I see a fair value gap here, normally I take it from a fair value gap like this one. This particular fair value gap is a good thing for me to take trade from. If I see it from here, I'm going to take trade from that particular fair value gap and confidently see how price will do. So if you use this knowledge, you are ever going to be above the market, guys. I'm assuring you that you will not regret this. So if price is coming back, now I'm in the trade. If I go back to the 4 hour, I am aligned with everything. So I can confidently say that I want to take my profit just above this external range liquidity. Can you see what we mean by that? External and internal range liquidity. External range liquidity grabbed internal and is taking it above to external range liquidity, guys. So moved outside external range liquidity. Okay, I hope you're getting this knowledge I'm sharing with you. It's basically what will help you to know exactly what is happening. So coming back to 4 hour, we took out external range liquidity again. This place. What do you do is to wait for price to come back to an internal range liquidity again. So external range liquidity was taken out, is to wait for price to come back to an internal range liquidity again. Okay, so what we're waiting for now is for price to come back inside again. After taking the external, it will come back inside, and this is an order block. This is an order block right here. okay, an order block right here at this point. So even though this order block doesn't have all the requirements for a valid order block like a fair value gap and everything, I'm going to use it because I'm seeing a sign of something called implied fair value gap right here. So price will eventually reference back to this place, and we're going to watch it and see what is happening. So let's see if price is coming back to an internal range liquidity. Can you see price coming back to an internal range liquidity? It came back to an internal range liquidity. So this movement again is a downtrend in the 1 hour time frame. For people trading in that time frame, even in the 5-minute, is an entire downtrend, guys. You can see it right here. Can you see that movement? So people that are trading here are just looking at this as an entire downtrend and are happily trading it. You can see, while from the higher time frame, you are watching it, waiting for that exact point where you will have a market structure shift like the one that happened right here. Can we see a market structure shift here? This is a market structure shift right here, a market structure shift at this point. So after all this, if the person in 5-minute time frame is selling and you are buying, do you know your difference? Your difference is that you have an idea of what is happening in the higher time frame. That is, the higher time frame is overall bullish, and there is a point of interest, that's an order block at this point. So if you are buying from here, from this point, I got this wrong. If you're buying from here and your stop loss, even though this is too large, my stop loss is here, I'm going to go down to the lower time frame and look for a very tight stop loss. I think that's better. That's better. Very tight stop loss. I want something that will not give me too much risks. From the lower time frame is the exact thing. So right here, I'm going to be in the market from there and see these guys are selling because they think it's a bearish market, and me, I'm buying because I know that the trade is going to work in my favor. Okay, and you can see what is happening from there. Those guys will be stopped out by now. Okay, so this is happening because I have an understanding of top-down analysis. Okay, so market pushed outside. So this goes on and on. Whenever you see trade, have an understanding of what is happening in the higher time frame before you go down to the lower time frame. Remember, we did a daily time frame. We saw that we are bullish. For the meantime, let me take out everything and come back to a proper chart. We were bullish until this point. So we had this understanding of this bullish movement from here to that place, and when we dropped down to the 4-hour time frame, we saw what is happening. After this market structure shift here, we knew that the market is about to go bullish as price came down, moved up, came down, moved up. So took out external range liquidity here again because we had a break of structure right there. So normally we're going to wait for price to retrace back into an internal range liquidity, but this is an exception. Price never really came down to this order block, so we let it be, and we can use the lower time frame to get better entry. If we are looking at that, we can be patient, look at it, opportunities coming even in the lower time frame. Okay, so this is basically how to do top-down analysis and look at it from higher time frame, lower time frame, higher time frame, lower time frame, and then get an entry. Even this place that you are seeing right now, we have this break of structure here, okay, which commands external range liquidity grab at that exact point. So price is obviously going to come down. Now 1 hour is your higher time frame, looking at what is happening. And you know, price is going from the daily time frame. There is nothing in front of price. Price has just pushed up. You're just looking at what price is doing. Okay, so what you do is to mark out your reference point or the block, fair value gap here. This is a fair value gap. This is also a fair value gap. Which of these ones price will use, we don't know. So, but all of them are in a discount level, so all of them are valid. Okay, all of them, the fair value gap, the order block, and everything. So as price will come down, we'll drop down to the lower time frame. We will drop down to the lower time frame and see what exactly would happen. That's to have an alignment. So remember, our 1 hour is bullish, our lower time frame is going to be bearish. So until there is a bullish alignment between the higher time frame and the lower time frame, we are not in this trade. So we go down to the 5 minute and watch it happen. Okay, and watch it happen. Let me delete all these guys and have something really proper. Okay, so let's see what is happening. Market structure shift is exactly okay. Market structure shift happened here right at this point, guys. Market structure shift happened here. If you don't know all these things, please watch this video. Let me show you this particular video, correct ICT structure marking. You will learn about market structure. It's part of the first 3 videos on my YouTube channel. You're going to see it. So at this point, we can see that market has changed direction at this exact point. So market structure shift happened there. So if I see this, as price comes back to the next, retracing into this order block, is my entry. And then these guys that are selling, if they are selling and buying, it's called money spot. Money spot. If these guys are selling and I'm buying, they are obviously going to get stopped out, and I will get this trade because I know what is happening from both the higher time frame and the lower time frame. So you can actually watch out this to play it, as you can see. So price is actually playing exactly what is happening. So I'm there, my take profit has been hit. So that is the understanding of top down analysis. These guys are selling and buying at this point. It's called money spot, and I'm into this deeply. So guys, this is all about this video. If you have any question, let me know. About anything you need me to explain, I think this video is exactly from you guys, and I said let me just take time and explain these basic things for some of you guys to get an understanding of what is happening in the market. And I actually use recent information. Thank you guys for watching. If you have any question, don't forget to ask me. I'll be there to answer you. Thank you. See you in the next video.